And we're live. Good morning to you, Vernon, and how are you doing?
Good morning, thank you. I'm doing quite well. I feel handsome as usual.
It never gets
Very
old,
good.
Vernon. It never gets old.
There's
It's
a,
the
this is a
midweek.
good feeling. This is better than having money.
Yeah, you say that now. You say that now. You say that now. Even Kanye West said, he doesn't know which one's better, man. Getting paid is always better. So let's get down to some of the business today. We are going to try and touch on a few of our markets this morning. Specifically, it is Wealth Wednesday, and we're going to be talking mainly about allocations for growth. Vernon, that's going to be the big conversation today. But we kick off with our market roundup and a good morning to everyone. Right. So the first thing that we do see is the Kwacha has continued to gain strength down to 20.42. We did see it dropped again. The US dollar dropped again another 2.06%. And this week it's been down 4%. So on the last month, we've seen that the Kwacha has managed to erase a lot of the strength of the dollar from the last month. Remember, it was up about 7% and it started to wipe it back down. So we're now down to about 12.84% year to date. We're not sure what's happening, whether it's just tax season. We have been trying to investigate first as to what has actually been going on. We've seen the same goings on with also South Africa. We've seen the rand down the rand is also down 2.14%, down 3.24% year to date, on the week, and year to date only up 6.88%. So the US dollar as an asset is losing value. I always warn people, Vernon, whenever they try and go into dollars as an asset. I keep saying, people, you've got a government that's actively trying to get this thing down. So you are
Mhm.
literally trying to go up against the government of Zambia whenever you're trying to hold dollars. That's why I say you only hold them as a part of what we call wealth insurance and as a way to kind of offset things. But no one ever listens. So I just always let them go through it. So there are people going through pain this week now because they've just seen about 5% of their wealth portfolio. It's probably the people who rushed in like in the last week thinking, now it's time for me to go and get wealthy. Well, tough luck. This is what happens. You do get warned. See, so when you keep only about 5% in things like crypto, in things like dollars, and things like gold, and you keep 5% each, when they go down, it doesn't hurt that much because the offset is that you start to see the stock market pick up. You start to see all other markets start to pick up. And that's part of the major wealth story that we're also seeing here. Now, obviously, as you can see, the outlooks for dollars are starting to tone down a little bit. This is our 4-month outlook trajectory. You can see it's starting to pull back, and especially from yesterday. So that's just something that we can pick up as well from. Now, other pieces of news that we also see in Vernon is our bond index. Bonds yesterday were up 0.14%, while you saw a 2.63% upwards movement in bonds in dollars. Now, this was mainly because, remember, the kwacha has gotten stronger. We're still seeing interest rates coming down ever so slightly, 24.79%. That's what we're looking at right now in terms of the interest rates on GRZ bond yields. And that's keeping it strong. Now, on commodities, we did see copper barely move yesterday. It barely moved an inch yesterday, while oil continued to move up by 0.06%, and gold still back up to 1.19% at 238.50. And we're seeing gold is up 11.63% in dollars, while oil is now dropped back down year to date, while copper, I think, just held flat. Now, remember, we're still seeing our outlook. It still does look like we might see a push upwards, but there wasn't much movement in terms of the price yesterday. Because of not much movement, we will start to see some of these effects down later, but we'll go deeper into it later. Now, going into cryptocurrency as well, we did see 1.7% downward movement in Bitcoin, with Ethereum up 0.08% and gold up 0.19, gold down 0.19%, mainly due to the dollar effect. This is all in Kwacha, by the way. So when you're seeing that price of 574,000 Bitcoin, remember this is still way below the all-time highs that Bitcoin had in Kwacha of, I think it was about 1.5 million. It was actually quite close to the 1.5 million mark. So to those who are there, they've lost quite a bit. Ethereum is also way off its mark. of where it was. But you can see that these assets have picked up this year 91%, 91.24% with Bitcoin. So now looking at the markets altogether, you see the stock market is up 8%, bond market is up 5.6%. Gold is still up about 26%, but you can see dollars up 12.8%. So this is why I always diversify between dollars and gold in case gold is moving upwards in dollars and the dollar is shifting back downwards. It's always good to have a diversification play between the dollars and gold part. And then you kind of have it as well between Bitcoin and Ethereum. So just in case as well, you get this dollar shave off. So the dollar shave off is not as strong as you're seeing the rally in actually these assets altogether. Now, getting out of this, Brendan, we also want to just take a look at where our economic calendar data has actually taken us. And part of what we see today, part of what we're seeing today is we're looking at a lot of PMI data that came out yesterday and still a lot of a lot of PMI data that came out yesterday and some inflation data that came out yesterday. PPIs yesterday we saw from Europe are showing that supply chains are starting to drop in prices coming from Europe. 13.2% PPI down from 15.1% in the previous month and also below expectations. So we're seeing a downwards movement in PPI, producer price indices. In other words, what we call factory gate prices, prices that stores are buying from factories, prices that any other distributor or retailer is buying from the factories. So we're seeing that in Europe, that we're seeing supply chain pressure coming down. Inflation index also in Brazil is starting to come down. Unemployment data is also starting to shift downwards in Spain. There's lower unemployment data while you're seeing composite PMIs coming out in Saudi Arabia. Most of it was US news yesterday where we did actually see in Canada, we saw building permits up 8.6%. That's good for copper in the long run. But sales data in the US finally started to bounce up 3.7% growth on the red book. Car sales were down only slightly yesterday, while we also took a look at other sales data. So car sales were down only slightly yesterday, Vernon, while they moved from 3 million to 2.99 million, and truck sales moved from 12 million to 11.83 million. So the auto industry is starting to pick up. In the auto industry is starting to slide down just ever so slightly. Durable sales dropped down by 0.5%. That means industrial sales are having an issue, with factory orders also down 0.7%. So again, industrials is always fluctuating. It seems not to be stable in growth right now, especially with China trying to pick itself up. Job loss, in other words, job openings data in America. Labor market problems are starting to come down. America has gone from 10.53 million job openings to 9.93 million job openings, meaning that the labor market might have an issue. The other thing that we saw yesterday was that oil barrels were down 4.36 million instead of the 1.8 million. Obviously, President Biden's going to have to now start responding to the OPEC situation and releasing something from the inventory, something to push something from inventory now. Now, today's data, one of the things we are picking up today is that it is the Chinese Qingming Festival. That is not an insult, Vernon. That is an actual thing. It is the Chinese Qingming Festival today. People don't understand that China actually takes a lot of holidays. It's just these people work very hard. So Chinese markets are closed today as a result of the Qingming Festival. And I hope I haven't gotten it wrong, because some will say Qingming, next thing we're saying something wrong. But it's also known as the Tomb Sweeping Day, where they observe, and it's an ethnic holiday in China. I have no idea what this one is, because they have a lot of them. Now we've seen today Nikkei services level growth in India has also slowed down. It's gone from 59 score to 57. German factory orders are up 4.8%. So you can see US factory orders down, German factory orders up. While simultaneously, we also are taking a look at Spanish production that's expected to come out today. Composite PMIs for Germany, Italian sales, retail sales are expected to come out today. Mortgage data is expected to come out of America today. CPI data is expected to come out from Italy today. While we're also expecting export and import data coming out of America, with services PMIs coming out of America and other PMI readings as well, with oil readings. And finally, the Caixin manufacturing and services PMI expected to come out from China at the end of the day, at the end of the Qingming holiday. Now, that has been our major news. Now, let's go into our deep dive for the day. The first deep dive, Vernon, which we're going to touch into is the bond auction from last week. Now, looking at our bond
Mhm.
market, these are our two reads from the last bond auction and the one from the previous month. First thing we can pick up is obviously there was a little bit of money, there was a little bit more money raised, but 100 million kwacha more, and that came mainly from growth in the 10-year bond and the 15-year bond. Those are the two main factors that drove the bond auction last week. Interest rates stayed the same across the board, with not much performance coming out. In fact, there was a decline in performance in the 2-year bond, decline in performance even in the 3-year bond. That was a shocker. 3-year bond went from 191 million in kwacha raised down to 103 million. So now it actually performed in one of its worst ever, only 25%. And you could even see the 5-year bond. So short-term bonds really had a very, very bad auction. 5-year bonds also did pick up from 48 to 50 to 44. A lot of these also are rollovers. So some maturities did happen in this space that pushed some of the money in there, especially when you're looking at 3-year, especially when you're looking at 10-year and 15-year. Most of that is a result of bond rollovers that actually did help that situation out. So that was the auction last week, and it's also picking up now. I'm going to give out my outlook so far. We have not seen, and I know people are going to keep saying positive sentiment, positive sentiment. Vernon, there is no positive sentiment on this debt situation. Okay, we have not gotten any news on the Zambian debt situation. I know people will say no, it's that's why the kwacha is moving in value. Kwacha is moving in value mainly because it's probably tax season. Okay, this is actually around the period of tax season that's actually driving a lot of that tends to drive the currency up. So whenever you're looking at April, October, those are April, July, October. Those are very strong tax months. So when people are making tax payments at the end of the quarter, you often find that is where a lot of money comes in, and especially if you're trying to get end of year results, end of year tax returns, and payments to be made as well. This is also the season to show that. So you may find a lot of corporate income tax also starts to come in because people have declared where their financial positions are. So it is this, Vernon, that is probably driving quite a lot of the dollar up for now until we get news of otherwise. Because we
Well,
have not gotten
some people
stronger
are
copper
attributing
price
that
yet.
to Kamala Harris's visit and the government trying to just pump in money in the interbank market. That's why people are feeling that's why that actually is the effect on the kwacha now appreciating because of those two interesting aspects.
Yeah, no. No, Kamala Harris's visit did not have that effect on the Zambian kwacha. No. And if you're talking about central banks' activity going into the market, central bank has been pumping money into the market at record levels. They've actually been pushing a lot of money into the market, and sentiment was still selling off. So it had nothing
Mhm.
to do with even the central bank. The turnaround just probably comes into the fact that we've had a very weak season when it comes to the year, and probably a lot of this has flushed out. You may find that imports are also starting to contract. Remember last time we saw a 2% contraction in imports. So it does appear that also there is a self-correcting mechanism, people, in the kwacha getting weaker and weaker and weaker, in that people can't afford to import stuff anymore. So they start to slow down and probably do as much things locally. It becomes more profitable to do things locally. But there is also tax season. So what we also pay attention to is during this period at the beginning of the new quarter, we always give it 14 days to see if this trend continues or if it reverses, because usually that's the main case. Now, we don't have anything flying into our bond markets in terms of money from the outside, because usually the dollars come into Zambia through the mining sector and through our bond market. Those are the big places where we actually pull in quite a lot of money. Stock market, no, because we're seeing people selling. Okay, we're actually seeing foreign investors selling positions still, and exiting. So I'm not too sure yet, like I said, if this is just tax season or not, but it requires observation until the 14th, because usually people start to get excited, start doing victory laps, and then the 14th comes along and all of a sudden starts reversing course, because this is a seasonal thing. We've seen it so many times. So yeah, as for President Harris setting foot, it's nothing special that she stated that's going to really change the situation. Seriously, there's really nothing special that was said. Yes, she did actually point out that some of the programs that they are offering, and I would like to
Mhm.
just maybe grab onto some of the programs that they are offering are things that Zambia as an economy we are going to benefit from. It is true. They talked about 500. They talked about $504 million worth of plus $500 million worth of bilateral assistance. They were talking about $378 million for HIV support, with the potential another $375 million from the PEPFAR program. They talked about $16 million coming in to help support government restructuring, and that's things like decentralization and corruption support. We talked about $3 million. Sorry, out of that $60 million, $3 million is supposed to go to help women in politics. They're also talking about they were also talking about some business investment and some business support, and also a trade deal that is supposed to be signed between Zambia and America. That is part of what the deal did encompass. She did a lot more, by the way, in countries like Tanzania, where they were actually now doing fiber investments, where they're doing all sorts of other investments. But yes, I don't think much came from that visit, except for just the random, look, we're here to help you, let's drop a bit down. And then turn around and China comes and says, yeah, we're going to build $3.5 billion worth of a power station. So take your little $500 and shove along, $500 million and shove along to the left. So that is the benefit of having people fighting over you. We are ground zero, effectively, for geo-economic competition. That is the other thing with Zambia. We're kind of ground zero for a lot of this situation. So I think for now, I would say, I would probably say this is just something that's worth observing. Also, because we're coming off the back of about 120 days of losing value of the kwacha, and we've only had about 4 days of gaining value. So maybe let's hold off on the victory dances yet until we can have significant data to show us that this is a reversal of trend, which is what we want. But let's just make sure of it before everyone starts getting caught on the wrong foot. Other deep dive, Vernon, that I am looking into as well. Obviously, in the US, for me, okay, it's not really a deep dive. I think this is a topic of discussion. Before we get into the topic of discussion, was the main man yesterday. I think, if you're my age, and I'm saying that as if I'm really old. People, I'm not. I'm just in my mid-30s. But if you're my age, you remember the trial of the century. The trial of the century was O.J. Simpson. Okay, the guy went on a chase in a white Bronco, and what's it? And I don't know. I think Ford at that time was like, why did this guy have to go on the lam with our car? Now, for the rest of history, the Ford Bronco is going to be associated with O.J. Simpson's run. But he took the police on a chase. He was accused of killing his wife, and then he went back in, and the trial of the century came. O.J. Simpson versus the people of America. And it became a race issue. It became a big issue. The whole world watched this thing. I remember watching that verdict. I was really young, but I remember watching that verdict like with my family as well. And it came out on the news. I don't know what we were watching it on the news when we picked it up. But it was the biggest discussion of the news. I think even entertainment channels have said this was the biggest story of the news. Like, this was the biggest thing. But I think yesterday we met the match of the O.J. Simpson trial, witnessing former President Donald John Trump getting indicted.
Oof,
I switched on every news channel yesterday, flipped through them, and they were all covering it. BBC, CNN, Sky News, African News, ENCA. It was literally getting covered. Al Jazeera were pretty much celebrating it because they all want that guy. you saw it even when you go on the business news channel. You go on Bloomberg, they were just talking about it. You go on CNBC, they were just talking about it. This man gripped the news. There is no person who stays in the news like Donald John Trump.
Yeah.
So it is history that this is the first former U.S. president to ever stand up and get charged. Now they add the questions: is he going to take a mugshot? He is going to get fingerprinted. He is going to get fingerprints on him. But effectively, what is this going to come up to? Well, what it does do is you do get a divided states of America, a situation where policy in the future may be a little bit difficult. Bipartisan work might be difficult for President Biden. Working along the lines with the Republicans may be very difficult because Republican politicians may not be allowed now by their voting base, or not be seen
Yeah.
favorably by their voting base to do that. What does it create? Gridlocked Washington, toughness for bills coming through. Remember, part of what Vice President Harris is trying to do is trying to get extra 375 million dollars for Zambia for the PEPFAR program. Can that go through in a gridlocked political environment? That's another story. Okay, so these are kind of the difficult things that we're probably going to see in the U.S. going forward. But it was interesting, Vernon. It really is interesting to see how these
Mhm.
people really want this guy. They want this guy. Like, this is now, I think, and maybe from my book, I'll say this. I think the liberals in America are overdoing it. Yeah, I'm telling you, what you end up seeing, what they may end up doing is creating a hero more than trying to take down who they call their villain. Because
Essentially.
look, it's the same thing our past president did with our current president. His aggressive nature towards him made the guy into a hero, made the guy feel pitied for. People felt bad for him and said, "But why are you going after this man so much? Okay, why are you going after? Why are you going after your candidate, your opposition member, so much?" And as a result, what do you get? Our president became a hero in the people's eyes. Well, it also did help that the economy went down the tubes during that period. So evidently, he created a hero. I think what ends up happening is that when you create such a situation, you create your own hero. Now, this is a bad comparison, and I'm in no way, shape, or form calling Donald Trump Hitler. But the result is Adolf Hitler also had this situation happen to him in the first trials when they had the Berlin. I think it was the Munich Push. Sorry, in the Munich
Mhm.
Push, what happened was that Adolf Hitler was put on trial, told people his beliefs, and he was turned into a hero. And they put him in jail, where the guy went and wrote he wrote his memoirs. That's when he wrote things like Mein Kampf, and then all of a sudden he has his philosophy and ideology, and he builds the Nazi party from there. You got to be very careful when you try and put someone on trial. You can actually end up creating a hero. The apartheid government put Nelson Mandela on trial, and they created a hero. So some of these trials, what you end up doing is you actually end up creating heroes, because you're going after them so much, they gain sympathy. People start to hear them out. The biggest thing these people could have just done is just said, "Look, man, let this guy rant on the side. Just ignore him." Okay, that's probably the best thing they could have done for themselves if they really wanted to see the end of a President Trump. They're probably not going to be able to put this guy in jail, because also it would be a silly move. And I know people are trying to say, "Not on my watch, we're going to get him for something." When you say words like that, okay, people actually said, like the prosecutor in New York actually said, "I'm going to get Trump." What does that sound like? It sounds like a vendetta.
Yeah.
So now you're gonna fire up his supporters. You're gonna gain him sympathy with people in the middle, and then you're gonna end up just turning yourselves over. So literally, this is people shooting themselves in both feet. But whatever I say, Vernon, whenever I see something like President Trump going to trial, when I see something like that happening, my ears automatically ask the question: what else is happening in the news that I'm supposed to be paying attention to? Because whenever I see something like this, I always think, "Nah, this looks like a distraction." And then I just
Mhm.
started flipping through data, thinking something has happened here, because there's something they don't want us to see for this to be showing on every single station. Because it's not
Mhm.
that important news that even market data has to track it. So I'm telling you, weeks from now, we're gonna find out that something big happened today, some huge paper or something was signed, and we paid no attention because we were watching Donald Trump get his fingerprints taken
Mhm.
and get
Yes.
indicted. And he was to go into holding and then return back to Mar-a-Lago. So that has been the interesting part of the day. Now, other part of the day, Vernon, that we are seeing. And by the way, but apparently the guy even just like raised money off that, like instantly, just started raising money off that for his campaign. So all the best. You're literally creating momentum for the guy. But like I said, the worst thing you can do is to create a hero out of somebody. Once you put a person on trial, you're making people sympathetic to them. And that can even happen here. If you end up going too hard and just saying, we're going to get people, eventually people start to feel sorry. If you overdo it, people start to feel sorry. Right, Vernon, let's get into our chart of the day. Before I go deep into that, our chart of the day is something I want to share from I want to share from us, from my profession, effectively, from wealth advisors. And this is what we call the divergence between investment investment value offering, and what clients actually want. So remember yesterday, Vernon, I gave you this chart, and I'm going to just quickly go to it. I gave you this chart of the for your pyramid. And if you look at the top of it, there's money management. So on the side is what I've put, what the levels are. The base part of the pyramid obviously is your personality, but the bottom layer is your money management to your goal achievement to your peace of mind to fulfillment. Now, this also is derived from the Fidelity Wealth Pyramid. So I also have to tell people that I've always said it. So this is a study done by Fidelity to look at what is it that the client wants and what is it that the firms are offering. And often, Vernon, there is a mismatch between what the clients want and what the firms are offering. See, firms mainly focus their attention on, and investment advisors mainly focus their attention on money management and goal achievement. As you can see on the chart on the left, it shows that 71% of firms are focusing on 71% of the firm focus or the time that they're spending with their customers or working on their customers is on achieving goals and managing money. And at the top, you'll finally see maybe peace of mind. But at the top, you only get about 6%. But what is the client really concerned about? What would they like you to focus more on? Well, they want you to focus more on 36% of the 36% would like you to focus more on fulfillment. Okay. That's what they would want. And this is global millionaires asking this, saying, when you've got a wealthy client, they're trying to focus on their life fulfillment. Yes, those who are not there yet would like to say, okay, yes, please, can you get us to our goals? But when you get someone there, they really now want to start talking about fulfillment. And that fulfillment is extremely important because that is the driver of their growth. That is the actual driver of value. So they're trying to tell most advisors here, the higher up your client goes, the more they want you to now start touching on the soft parts of life. Okay. And the soft part, I know that in Zambia, when we say soft life, that means something else. But what I do mean when I say soft parts of life, I'm talking about things like, okay, I'm going to leave a legacy behind. I've got children. I'm trying to leave things behind. I want to fulfill my purpose. I want my money to help me fulfill my purpose in life. I feel like I need to have something where I can look back and say, I really did what I set out in this world to do. So this is what clients truly want. So part of the integrated approach that we should be taking is a start with the end in mind. We start with the end in mind focus, getting people to now always think, okay, what is the end state? And I've actually come to realize, Vernon, that actually, when people catch that more, and people have that conversation more, their dedication to investing becomes better. Their dedication to putting their money in assets become better, and they're willing to even make changes. So remember, we've been talking about fighting the fixed mindset and fighting the fixed mindset. And one of the things I do have seen, Vernon, is that when people start with the end in mind, they're willing to embrace changes in their portfolio. So this chart of the day, thanks to the people at Fidelity, has actually helped to see that what people really need deep down inside. And you know why I say this is important, Vernon? When you are not wealthy, you are a result of your circumstances. But when you are wealthy, you are a result of your choices. Okay? Everything, when you see, this is why I know people don't like that because they'll say, oh, what are you trying to say? When people don't have money, they can't be honest. It's true.
It's a reality, though.
When they don't have money, they're speaking their circumstances. When you don't have money, but when when you have wealth, Vernon, you can, and you don't like your boss, you can literally just tell them buzz off, and just walk out of work. A lot of people, if you gave a lot of people $1 million today, they'd walk out of work today. Like that is literally what would happen. So that means they were tolerating things they really didn't want to because they had to make money because there was nowhere else they had it. But if they had it, their priorities would change. There are two things, Vernon, that change people's priorities: a lot of money and less time. Those are the two things that I've seen change people's priorities. When they have a lot of money, except for like big shifts in life, like having a child, getting married, those are the things that can also change your priorities. But the two biggest things I've seen is a person getting a lot of money, okay? Then you start to see what their real priorities are. Okay, somebody will say, no, with money, I'll save, I'll do this. When you give that person $1 million, and I've told people this, look at football players and basketball players and those people. When they get that check, what happens to them? Their brains just go this way. Yeah, mine's good. All of a sudden, those priorities of saving and trying to be frugal and trying to be good with money, poof, out the other way.
Yeah.
Okay,
Yeah.
but that's simply because that was never their character. But when the money comes, money doesn't. I know people say money is evil. It makes people evil. Nope. Money just reveals exactly who you are. Okay, that's all it does. The who you are that was too expensive to come out when you had no money. There is a real person in there, Vernon, that only $1 million can show. Okay, power, money. This stuff shows exactly who you are. People even said with politicians, no, when they were campaigning, they were so nice. And then when they got into yeah, that's because that's who they are. When somebody has been voted in year 1 to year 3, that's who they really are. Okay. The excuses they'll start giving you, the pomposity they start walking with, the smugness, that's exactly who they are. Okay. That's not the position. That was who they always were. Who they are during elections was who they think you want them to be so that they can get your vote. Okay, just like people do even at work, they'll be who they think you want them to be so that they can get your money from you. In other words, the salary that you give them. But this will show you now that what people are when they have money. And what you'll see is that when people now get their wealth, they start becoming a little bit more purpose focused. They start thinking long term. They start worrying about these longer parts of life. Now they start worrying about the legacies, the lineage. So they'd want us to focus more on it. And that is why, Vernon, I've gone from the basic, because this was all we got from Fidelity. This was the basic one. So I've gone in there and we had to develop it further at our firm, and we had to go into what is the fulfillment? What does fulfillment mean? And that's when we talked about the legend, legacy, and the lineage. Now, what I found, Vernon, is that the visual of the legend, legacy, and the lineage helps a person see the future more and makes them more willing to sacrifice the present. It makes them more willing to make changes. So, if you want resistance to change to end, the question is, where do asset markets take people? And I'm going to just quickly shift to our quote of the day. I know I have it at the end, but I'm going to shift to our quote of the day. And this comes from Jamie Dimon. And he says, as countries get wealthier, you see more financial assets. So today's topic of discussion I want to talk about is the resistance to financial assets. Okay. And where we can try and get people to try and embrace more financial assets. Now, let me quickly define financial assets so that we can have that out. Financial assets, Vernon, are financial markets assets you can invest in, or paper-based assets, be it cash, be it stocks, be it bonds, things that operate in the financial market where you can store value. Now, remember, money has three purposes, people. Money is a medium of exchange, a unit of account, and a store of value. In other words, it's a medium of exchange in that when Vernon and I need to do a transaction, we do it through money. He doesn't bring a cow. He doesn't bring a cow. I don't bring three goats. And then we're trying to figure out how this balances out. Then I have to chop a goat's leg off and go back home with a limping goat. Yeah, that's not how that works for me. So we decided to use something like money, and a medium of exchange that we can run our transactions through, so that I don't have to sell my exact stuff. Vernon doesn't have to sell his exact stuff. We can use this standardized thing called money. Money is also a unit of account. So whenever we're trying to track, we're trying to quantify value. When we want to quantify value and quantify transactions and quantify the economy, we use monetary terms. We don't say the economy is X goats big. We don't say the economy has grown by 50 goats. We say the economy has grown by X amount of kwacha. So it's a standardized value because now we can value everything. In anything, when money is more than this, it is a value system. Money reflects your values, but it also reflects what value you place on things. Okay, so now where can we put money as a store of value? We can put money in land, we can put money in houses, we can put money in animals. By buying these things, we can buy animals, and there's our money sitting there on our balance sheet. Everything we own is our balance sheet, quote unquote, asset. But in the proper financial or wealth sense, assets should be things that put money in your pocket. Okay, things that add money into your pocket. That is what you should define as an asset. And obviously, on Wealth Wednesday, I'm really going to try and tone it down today so that we can understand. Now, the purpose of this, why I want you all to understand this, is that in Zambia, we have a slight resistance to financial assets. Okay, we have less than 2% of the Zambian population having life insurance policies, health insurance policies, investing in the financial markets, investing in unit trusts and stock markets, bonds. We have very few people. Vernon, I think if I looked at the numbers correctly, in terms of retail bond investors, we're probably at about 6,000 in general, in total. Okay, 6,000 Zambians as a whole, all of them put together are investing in asset funds. Okay, that already tells you how tough a swing this is. So in terms of the retail numbers, we don't have that many people. Stock market accounts are also not that many. I think there's less than about 20,000 people who have been invested in there. You're looking at unit trust accounts, similar things. Zambians are not that well invested in financial markets. You can say, yes, the majority of people are poor, they're unemployed. Cool. Yes. But 11% of the population, but in fact, not even 11, 13% of the population are employers or formerly employed. So, can you explain to me why the 13% of adults are not even investing? That's 1.3 million people. How are we only on about 50,000 out of 1.3 million people that are actively investing in the financial markets? That is abysmal. That's where the problem is coming from. Okay, the only thing those 1.3 million people are investing in, mainly, if you want to be honest with me, if you want to be honest with one another, the only thing those 1.3 million people are investing in is the sorry, the only thing those 1.3 million people are actively investing in, Vernon, is NAPSA, because they've been forced to, and NEMA as well, because they've been forced to. But
Yeah.
everything else where they're not been forced to and it's by choice, they're not doing it. If you're looking at workplace pension, you're looking at about 129,000 Zambians who are doing it. So there is a
Yeah.
resistance to these assets. Now, the first thing we have to look at, mainly if we're looking at what is the resistance to the assets, the first thing I think we need to understand is, one, what do these people want? Okay, so when FinScope 2020 was being done, what we found was, one, the Zambian people are looking for liquid assets. Okay, they're looking for something that can easily be transferred into cash, right? So liquidity is the number one asset point. The second one is simplicity. The average Zambian is looking for a simple asset. I think this part has defeated a lot of people, but the average Zambian is looking for simplicity in their investment. And the third thing they're looking for is accessibility. Okay, these are the top three features they're looking for. Now, in as much as assets in the financial market can be liquid, Vernon, the problem is they are not simple. Okay, they have not been simplified, and added to that, they are not accessible. So these are the issues that have to be fixed. Friction in onboarding. How long do the processes take? Are they digital? Are they working with what people are used to? People use mobile money now. Are they mobile money friendly or not? These are big issues that most of the Zambian investor class are trying to look for. The people who are trying to invest their money are looking for. So this is what's causing a lot of the resistance to change. So if we're gonna sell the issue of people being able to invest in financial markets or capital markets, the way we're trying to push it, then we need to start giving them the end picture first. Okay, and how asset markets. So if you can tell somebody, this is the life you want, okay, this is the freedom you need to get to pursue the life you want, these are the goals you need to meet to pursue that, and these are the assets you should invest in to meet those goals. When somebody can logically see that train, and that's what I take people through, when somebody can logically go down that train, then they feel more comfortable saying, okay, now teach me about this. That works. If this is how this works, teach me about it. Obviously, you have to cut through the people who get swindled because they're just willing to chase quick money. So today, Vernon, I'm going to talk about four areas of resistance to change that people go through. On the other side of this final break, I'm going to talk about four areas that people go through that lead to the resistance to investing and the resistance to growth financial assets that they can invest in. But that's on the other side.
All right. All right, and we are back. Thank you so much for still sticking around. Concluding, of course, on Behind the Market today.
So let's start, Vernon, with goals. When you have your high five investment goals, what do these investment goals, which assets suit these? So when it comes to your harvest, this one is more based on your risk profile. You need to take a risk profile, but I always say keep 85% of your harvest assets. In other words, your retirement savings. And retirement, people, is not an age, it's not being taken out to the back of the yarn. It's the point where you don't have to work for money anymore. You have enough money to work for you and to meet your needs. Now, the problem with retirement is the reason why we don't keep people in the labor force forever is because certain people will not have there will not be in any incentive to put money away and then to leave the labor force. So we've put a termination point for people as to how long you can work unless you own and run your own business. Okay, so most people have to then do that. And retirement, people, mind you, is not also stopping work. Retirement is transitioning to meaningful work. So remember that at the beginning, you start by offering your energy. Remember, I said there are three phases of life. In the first phase, your value is your energy and your availability. Between 15 and 35, you are energetic and you are available. That is why people hire you. Between 35 and 55, you are proficient and you've mastered something. Okay, you are creative and you are proficient. You know how to create something and you know how to do something very well. So people will pay you the premium. Between 55 and onwards, in fact, 55 onwards, you are wise. You know a lot. You are the kind of person we want to sit around and hear from. What do you see in the world? You guide us so that we don't have to make maybe some of the mistakes you have seen or made yourself. So when you get into retirement, it's about where you're transitioning from selling your services and your skills to selling your wisdom. Okay. Beyond 55, you need to start looking at selling your wisdom because you've seen some things. You probably have about 20 years experience. But at that time, maybe you want to now start selling your wisdom in a meaningful way. You want to write a book, maybe. You want to go on teaching or speaking to us or stuff like that because now it's time to energize the younger generation and to get them guided. Now, for you to get there, Vernon, you need to maybe have some financial assets to give you the regular income that a salary used to, or a regular cash flow that you used to get from your business. So at this point, you are retiring into being able to do what you want with your time. Okay, because you have to eat every day. That's a regular expense. You still have to move around every day. That's a regular expense. You still have regular liabilities. So you need regular cash flow. So at the beginning of building your wealth assets, the younger you are, the more you can take risks like going into the stock market. So two things, by the way, will determine how much you should be putting in things like the stock market, or what we call risk assets, and how much you should be putting in safe assets such as bonds, which are the fixed assets, the fixed income assets. And the first thing that determines that, Vernon, is your risk capacity. And risk capacity is really how old are you? Okay? How old are you will tell you your risk capacity. The other thing you should also be looking at, Vernon, which is actually quite important, is also your risk preference. So it's your capacity and your preference that are going to determine what kind of assets you should have as your asset mix for your harvest. Now, the older you get, the more you want to plunk your money into the bond market, because that market is where you get a regular income. Bonds are income assets. Okay, they're like a house. You don't need a tenant, but you don't need a tenant in it. Okay, so there are all sorts of things. So you go into them in the latter part of your career as well. You start to hold on to them because that's what's going to replace your salary. You're able to collect a coupon every 6 months, and that is your salary effectively. Now, remember, always be knowledgeable of these things because that'll help you. So, structuring a bond portfolio, I've told people things like laddering, I've told people all sorts of concepts that they can utilize. So that is what you do for your harvest assets. Your health assets, there are two options for health. You can either increase your harvest so that there's an extra income that is generated. So maybe let's say your harvest target was you want to be earning 15,000 kwacha in your retirement. Okay. Now, health costs will probably be an extra 5,000. So you want to have enough assets that your assets can generate 20,000 kwacha a month worth of income. So at 15,000 is what you get to use. 5,000 can go towards any health expenses, because when you get older, Vernon, you're going to be battling things like BP. You're going to be battling things like the downsides of your obesity, sugar illnesses, all sorts of things. those are issues you're going to be dealing with in the latter part of your life, which are going to be very expensive, and you're going to need constant treatment for them, and you don't want it to wipe out your wealth. The other option that you can do, Vernon, is you can do something called post-retirement health savings, where you can currently save your money in certain assets that allow you to do this. There are certain unit trusts and assets that allow you to invest in them, and then at the end of it, they buy you something called a health annuity. In other words, you don't have to worry. You'll now be on health insurance until you pass away. That's health savings. Okay, so those are your two options of assets that can do that. You pretty much also you can line it up. Higher education, Vernon, is you have children and you want them to go to college. Every parent wants their child to get as educated as possible and would like to see their child go to college. But in today's world, children are having student debt. So you want to try and put away money for that. Now, because this is a goal that is generally 20 years or less, okay, because you need to have this money by the time your child turns 20 so that they can go to college with it or university with it. So it's 20 years or less. You can't really take as much chance putting this money in the stock market. So you put this money into the bond market specifically, or fixed income unit trusts. These are the assets that work the best with it. Okay, so this is why I'm talking to you about. So if you want a chance to send your child to college, you want to find a fixed income unit trust, work out how much the savings and investment amount is and what the expected interest for that journey is. And you can either put a lump sum at the beginning and allow that to metastasize into your child's your child's college savings, or you can constantly put a monthly amount in. Now, most people don't have the lump sums to do this, but if you do, I always like to tell people knock it out. Why is this important? Because if you don't, most parents, what they end up doing is using their retirement money to pay for their children's college, okay, when they're meant to try and put that money towards their retirement so they don't end up in destitution. So saving for your children's college is important to protect your harvest. You want to protect your harvest to be for you, okay? The fourth thing you're looking for is home ownership. Now, you can start yourself a home builders fund, putting money, let's say, in a fixed income trust or a money market fund constantly, so that at each stage of your building project, you can now extract that money and put it towards it. So that's something you can do. You can pick money markets products, or you can pick money markets funds or fixed income funds, bonds, or treasury bills to try and play this one, because this is a very medium term product. It's really about 2 to 10 years. You really want to put yourself on a 2 to 10 year building project. And huge purchases are anything less than 10 years. Again, fixed income. You're really looking for unit trust for this one. Save it. If it's a longer term thing that takes about 5 years, use that one. If it's 2 years below, use a money markets unit trust. Okay, these are your options that you need in order to be able to meet these goals. Now, a lot of people keep their wealth. In cash and land in Zambia. Mainly because there's a resistance, there's a struggle to get people to transition to assets. So there are 4 areas I've seen, Vernon, that people have. Remember, we had our 8 resistance to change points. So I want to quickly talk about the 4 areas that are making people resistant to changing. And one of this is competence. Most people avoid financial assets because they struggle to understand them. And so they feel incompetent. They're worried about them. Now, I don't advise you to go and invest in something that you're not competent in. So the first thing you do is go and invest in education and an advisor with the heart of a teacher to try and take you through understanding it. Okay, before you put thousands of kwacha in there, pay a couple of hundred kwacha to get a course, something to help teach you. Okay, some basics, buy a book, something, but get taught first before you put money in, and overcome the competence by first getting taught and then incrementally investing slowly in it so that you can get the hang of it and grow into it. The second problem I've seen, Vernon, the second area of resistance is culture. Most of our culture has been based on land and cash wealth and some animal wealth in some regard. But urban culture in Zambia is how much cash do you have in the bank and how much land do you own. That's how wealthy you are. And then how many cars do you have to show it off? And then you end up just burning your money. That's your problem. But anyway, the way to remedy that is to expose yourself under advisement. Exposure to new ideas under advisement helps. So you need someone to usher you through it, someone to mentor you through it. That is what an advisor can help do for you. They can bring you through it. Okay, so also this community, financial assets are not yet understood at community level, Vernon. Remember that you have to sit down with your family at, let's say, Christmas dinner or something, or at a family dinner or a family wedding or something. And then they're busy talking about, so where do you keep your money? How do you invest? No, I invest in stocks. What's that? They'll tell you you're doing witchcraft. Okay, so those are And and you have to have family conversations. These are dinner table conversations that people have. And so they've just heard the voice of their relatives tell them, why are you putting your money in things like that? Okay. Just go and put your money in land and go and get rent from somebody. That's all they'll tell you. I'm not discrediting property. I'm saying it shouldn't be the only thing in your portfolio. But people tend to do it because that's all they see their community accepting, and they don't want to stand out. People are afraid, Vernon, of standing out. And finally, confirmation. Some people find it hard to assess their progress in financial assets. So, employing a financial tracker is for tools. And also, Vernon, by the way, when it comes to community, I would always tell people assess the community. Are they who you want to end up as? Or are they people you're just fitting in because you're afraid of losing your tribe, which is your identity? When I say tribe, I just mean the people you hang around, not your actual tribe. You can't lose that. You were born into it. But what I simply mean is that you lose that identity from the people that you hang around. Assess these 4 areas, because these 4 areas, Vernon, are mainly the resistance points to people doing this. And as financial practitioners, we should do it. And once again, I would like to give our quote at the end of the day. As countries get wealthier, Vernon, you do see financial assets. And I'll give you one stat: 62% of Zambia's wealth is actually in financial wealth. 62%. Okay. So if you're not keeping 62% of your wealth in financial wealth, oh, Vernon, what does it tell you? What does it tell you? When you go to wealthier countries like the U.S., like North America, Europe, Switzerland, you do find that about 75% of wealth is kept in financial assets. So the culture, what you start to notice is that the wealthier people get, the more you see them use financial assets. So if you want to be, and Dave Ramsey said it best, if you want to be a millionaire, do millionaire things with money. If you want to be poor, do poverty things with money. That is the reality. And we'll leave it there, my brother. See you tomorrow.
Appreciate it. Thank you so much.
Cheers.